When we talk about that, one of the big things that we're trying to focus in on, the four kind of takeaway points that we really want to get to, we want to make sure that we can ensure a compliant loan. We also want to maximize the value of the asset. We want to see how tech can make it more cost effective. And of course, we want to have a better user experience. And so the panel that we have up here are people that have a ton of experience in this area, and they all have different avenues to take and tackle this issue. So fintech, we've typically seen where it's lagged in adoption. And so with that being said, in the mortgage industry especially, we've seen a lot of this. I just wanted to throw it over to each of our folks here. We'll start with David. Just things related to how you guys see technology involved in this as we get into this a little further.
I get to start with this
one,
huh?
Yeah, you get to start with it.
Yeah, no, it's interesting from a technology standpoint. I mean, I've been around long enough to know or to have seen the day where we had 50 plus loan origination systems, and I always thought about them as glorified word processors. But more and more moving forwards, you take what was a word processor and now you bring the concept of data instead of text into play. And with data, it can be used across systems and give you flexibility as far as implementation is concerned. And then from that comes where MISMO plays a big role is standardization of not only the data, but also the processes and the terms that go into it so that we're all speaking the same language. And when you get to that point, then that opens the door for technologies to be able to interface with one another. It gives you flexibility as far as not having to stay in a single ecosystem, but to have a broad ecosystem and pick back to where you can pick the best of breed in particular areas that fit your needs. And then going forwards with AI, which I know will be a topic, is that it provides a standardization of data so that AI knows what it's what it's going after from the generative standpoint and otherwise. So data has become central to the technology as the technology continues to advance within the industry.
And I think that kind of leads us in really well to actually Anne-Marie's kind of area of expertise that kind of talks a little bit more about this. And so if maybe you want to just talk about a couple quick points that you'd like to go over here for us today.
Yeah, sure. Well, thanks so much for having me. I flew out to California yesterday and got to be a part of, waking up this morning to no power and figuring it out. But it's been fun. I really appreciate the invite. I'll just sort of mention a few things. At FHFA, we've really started to dive in very deeply into fintech, into innovation, artificial intelligence, machine learning, and really looking at what is going on in the mortgage industry. AI and innovation and fintech have been around for a long time, but a lot of the tools perhaps aren't being adopted as much as we would expect. And so a couple of years ago at FHFA, we formed the Office of Financial Technology to really be that arm of the agency that is interacting with the industry, is really getting sort of an understanding of what are the challenges, the barriers, what are the opportunities, and what are different areas that we can explore. And so I'll mention a few things. One of the things that we do through the Office of Financial Technology to engage with the market is we hold regulatory tech sprints. We held our first tech sprint last year, focused in on looking at data digitization and digitization of mortgage processes broadly. So we had about 80 participants come to Washington, D.C., to our headquarters to get put onto teams. We had 10 teams sort of competing. It was almost like a Shark Tank style event, trying to solve for that type of problem, looking at digitization of mortgage processes and really sort of bringing to light some of the art of the possible, and really bringing to light, too, where some of the challenges and barriers that we at FHFA and amongst the regulatory community can be thinking about. This year, we're going to be focusing in on generative AI and housing finance, and so hopefully we'll get into a little bit more about that in the panel, but thanks again.
Yeah, absolutely. That's excellent. So next we wanted to move over to Ike with a few of his insights, just what he's seen thus far with fintech and kind of this whole experience.
Sure. thanks for joining us and flying in. Appreciate it very much. And like you said, data digitization starts off with, data capture, data exchange, data transmission, and data starts from, in this industry, which is quite complex, with all sorts of rules and regulations in different states. Starts off with the consumer side, starting off with an application, and then all the way to the end. That's why we call this Sanitize the data, and all the way to securitizing the investment that one started with and ended with in the industry from one hand to the other. You might be one of those guys, or we might be part of that blend that ends up in a securitized MBS asset quality that we were the ones getting the loan to start with, right, as an applicant. Anyway, so that stitching is what transformation of this industry has put us into a position where you see a lot of innovation and all sorts of compartmentalized workflows, from day one certainty that FHFA FinTech just recently worked with GSEs to let them know these are the 6 vendors to use and so on, approved. And that's beginning to happen on the next sprints for the other workflows from what I understand. So that transformation is happening, and as it's happening, we've seen a lot of innovation that's come together, and it comes together with the good side and the bad side as well. The vulnerabilities on connecting new tech, sometimes the example I can use is like, if you don't update your Apple phone, the next day a number of apps don't work. So when new tech is coming into play on legacy systems or working with new partners, that's one of many issues that can trigger vulnerable endpoints where bad actors can participate, or you can end up unintentionally condoning a transaction that you really didn't want to check mark on and let it go. So we're seeing a lot of innovation coming through for collaboration and embedded solutions amongst partners to deliver better quality of tech and helping cut down cost, take away inefficiencies, and deliver value and a good asset quality at the end.
Yeah, absolutely. And that whole idea behind the delivery kind of leads into what I would think that, Chris, you probably specialize in quite a bit, right? The compliance piece of this all, right? How can we get that quality there to have a compliant loan?
I mean, I would definitely say that having as many real-time checks along the way as you can do is extremely beneficial, because being able to get from point A to point B without having 5 or 6 failings in between is going to certainly save you time when you actually get to point B. It's also going to reduce your cost, reduce the friction for the consumer, all of those things that can be done as much as possible on a real-time basis without having to have manual intervention necessarily, unless there is some sort of an exception, would be a huge benefit to any company. Would reduce the costs as well too, not just the potential civil money penalties or remediation costs, but also just cost in general, because every time you touch that file, every time you touch that lead or anything like that in a manual way, you're costing yourself money. So I would say it starts with being able to layer compliance into I'm not just advocating for compliance. I mean, compliance is important. Let's not joke around. But I'm not trying to advocate for hiring an army of compliance people. I think that you can do more with less today than you ever could. So just giving them the right tools and allowing for it to be integrated with all parts of the process is going to go an extremely long way. And before I wrap up, I'm sorry, I just want to say one thing. The tech sprints are an amazing idea. Getting wonderful, great minds and engineers together is huge.
Yeah, it's been very innovative from the tech. Seeing that whole activity around the tech sprints has been fantastic to watch, right? With everything that everybody's saying up here and kind of what they're focused on, it kind of all brings back to the one that I'm most interested as a lender in, which is securitizing the asset, right? So for me, it's how can I leverage the folks that are up here so that I can have great ratings? How can I make sure at the end of the day that my asset has more value than what else is out there? And really, it just comes down to, if I have a higher quality loan and I leverage these assets, not only is it going to be more profitable for my organization, but at the end of the day, it allows me to have more liquidity available to me as well. And that's really kind of where it all tied together for me in this specific panel when we talk through this, right? So let's just talk a little bit further about each one of these kind of pieces, right? So securing and sanitizing, that's really the data here that is probably a key factor, and why David's here from that perspective, because we safeguard the entire mortgage ecosystem by protecting the home buyers, we protect the lenders, and the overall financial system, the more that we can leverage the things that are available to us, right? So when we talk through that, specifically, Chris, I know we had some more thoughts around the compliance piece. Like, it's important to make sure that you're touching it often and a lot. Like, what other things should we be looking for from that perspective?
I think the attitude towards compliance at an organization, the tone from the top, is extremely important. Recognizing compliance as a sales tool, as a selling point, I think goes a very long way, especially in a securitization perspective. And you don't want something that's going to otherwise sully a pool or something like that. You want to be able to say, you know, this is as pristine as possible, and the only way you can do that is to show that you've had controls all along the way, because, you know, not everybody wants to do a 100% audit of an individual pool, especially when we're talking about a larger group of loans. It's one of those things that if you can set that tone from the top, and you can ensure that, you know, you're number one, you're supporting your compliance function, ensuring they have the appropriate funding, the right reporting, you know, having the chief compliance officer have a seat at the C-suite, as well as being able to report directly to the board on any type of you know, exceptions or whatnot. That all goes a very long way. And I mean, I know that we've got to be realistic. If you have those things in place, your buyer can check the box. You know, and being able to check the box is very important if you want to continue to do that on a forward flow basis and just keep the engine running. So if you get that reputation for having appropriate compliance controls, procedures, the tone from the top, all of that, and you're able to check the box, it makes the next buy a lot easier.
Yeah, that's a great point from that perspective. You know, one of the things I've struggled with throughout my entire career is the data, right? So constant struggle, and it's something that we all struggle with, and I know that from that perspective, it seems like the typical manufacturing process that I've seen out there for quite a few folks is we look at the things again and again and again and keep touching it over and over, right? So from that perspective, David, maybe you could shed some light on some of the data pieces that you're seeing, whether it's e-closing, whether it's post-closing, like all the corrections, anything that happens with that process.
Yeah, that's always been a problem, right? So it's from, you know, the stare and compare, where you've got documents and you got data, and you check it 14 times from the time it comes in the door to the time the loan closes. And then the other thing is, you know, I call it trust, right? I don't trust you to send me stuff that's accurate, that, you know, I don't think that you've messed with or something like that. So what am I going to do? I'm going to pull it again myself so that I am, you know, feel comfortable with it. And then I'm going to send it to Anne Marie, and you know what? She doesn't trust me. So she's going to do the same thing again. And it goes on and on and on. And the net result is, you know, the true data never changes. The cost of origination continues to go up. And then if you've got anything that steps out of line just a little bit, it goes up even more. If you look at the cost of origination, you know, depending on what numbers you're looking at, we've gone from about $3,600, you know, 15 years ago to over $11,000 today. While at the same time you've got organizations spending anywhere from 10 to 17% of their annual budget on technology. And, you know, so you got to say, there's got to be a solution here somewhere. And, you know, we're kind of looking at things, you know, we use kind of I heard somebody talk about in an earlier session about you got to have something to measure with, or something that you're going after, a goal that you've got to reach, and you use that to measure everything that you do. And, you know, I've got a very simple one that I've been looking at, and that is, how can I close and securitize on the same day? And that's probably, if I can solve that, I solve a lot of the other problems up front. And so, you know, there's things that we're looking at, like using smart docs for, you know, the various components within the mortgage, so that for those of you that don't know what a smart doc is, basically it's an electronic version. If you go out and say pull a verification, If you have it returned in a smart doc, you're getting both a presentation layer, in other words, you can look at it, plus you're getting data that goes with it. They're put together in a single document with an electronic document with a tamper-evident seal on it. And so you know where it came from, when it came there, and who pulled it, so that you've got all the information around that data. So it's trustworthy as to, you know that it came from the source. You know that it hasn't been touched because it's got a tamper-evident seal on it, and if I tried to do anything with it, it would break that seal, and you'd know that you have to go do it again, so that when you get it, and you get it, and you get it, you get the same thing flowing through. And then that way, when you close, you've got all this data together, it's sealed, it's tamper-evident, it's trustworthy, and you've got a good, clean set of data that's going into closing, so that you are in fact set to securitize if you so choose to. But you know, these are things. This is not stuff that's being cooked up for the future. It's here today. So the next step is for take that leap, that trust, that faith to go in and start implementing it and trusting the technology, and we'll save a lot of money and move a lot faster too, I think.
That's great. So I think it kind of moves into if we can get a peek behind the virtual curtain, I really want to understand where you think FHA, like what's your roadmap? What are the innovations that are on track, and what are some of these things that you think you're going to be focused on coming up?
Yeah, well, I'm not sure how familiar everyone is with the FHFA Conservator Scorecard, but this is basically how we annually set sort of big picture goals and objectives with the enterprises across a wide number of policy areas. But we have an objective in the fintech space and been working with the enterprises for the past couple of years to really understand how the GSEs are exploring sort of what we call emerging technology. So what does emerging technology mean to us? It could mean a number of different things. It could mean looking at distributed ledger. It could mean looking at advanced forms of AI. And that's one I really want to sort of double click on for a minute. We've really started to explore generative AI. And at FHFA, we really want to understand a few things about it. One, what is sort of the art of the possible out there? What's beyond sort of the hype that we hear about around large language models? What are sort of those real use cases in the mortgage process, that can really illustrate things like process efficiencies and cost savings that impact the borrower, increasing access, increasing transparency and affordability. And we also want to do this through the lens of what we call responsible innovation. So we think about responsible innovation through the lens of thinking about not just what is the art of the possible, of innovation and of change, and change for change's sake, but how to do it in a safe and sound, responsible, well-controlled, well-understood manner where all of the risks are understood, assessed, and controlled ultimately. And so this is really the focus of what we're focusing in on for the tech sprint this summer. In a couple months at FHFA, we're going to have our second tech sprint focused in on the use of generative AI in housing finance. And we're going to be asking teams to come with us to not just solve for that art of the possible, but to also solve for and understand and reflect back to us an understanding of the risks and controls. Now, we've separated sort of particular use cases into 4 large buckets that we're hoping to explore. One is in the area of sort of consumer-facing applications, where we're looking at, how can the consumer be more empowered to understand their financial situation and be empowered to then go through the process of taking out a mortgage loan and be educated about all of the steps along the way, especially for first-time home buyers. This can be a huge barrier to entry, and we think there are use cases in generative AI worth exploring there. The second sort of big bucket area is around assessing credit. And so this is everything from the credit decision itself to everything that happens around that, verifications that happen that David was talking about, et cetera. And so we think there's potential use cases for generative AI in this space, and so we're really hoping to sort of learn from the teams this summer on what the art of the possible is. The third area is around operations, so all the operational aspects within mortgage lending, back office operations, think there's a lot there with generative AI as well. And I think perhaps most relevant to this panel too is in the risk and control space. We think in the compliance process itself, there's a lot of interesting potential and applications to explore. So that's what we're hoping to get out of the sprint this summer. I'll just mention too that applications to participate in the sprint, that application period is still open for another couple of weeks. And so if you are interested, I would definitely encourage you to check out our FHFA Office of Financial Technology webpage. You'll see more information on it. Happy to share information after this panel as well. I think some people have participated in last year's sprint, perhaps, that are up on stage. I know David was a judge for our tech sprint last year. So definitely encourage you guys to talk with your colleagues and sort of get a sense for, is it worth it going and participating? We certainly think so, and we certainly have learned a lot. We take the tech sprints very seriously, and we really see it as a great opportunity to sort of engage with mortgage industry stakeholders in a way that we haven't done before. So
That's great. Thanks for highlighting those for us. So it kind of leads into one of the most key important pieces, the value for everybody that's involved in the entire transaction, consumer, investor, everyone. And when we went through some of the prep for this particular panel, Ike just kept bringing up the customer experience. He kept coming back to that. It was something that he, I think, feels really passionately about, and you get it from him everywhere that you go, whatever topic you're talking through. So maybe you want to talk through that for the group here, Ike.
Sure, thank you. Thanks, Anna Marie. Yeah, so when we were discussing this topic, it came from an invite from MBA and MISMO to DC, amongst others, many peers and great innovators, where the industry is, dealing with all challenges we have outlined. I won't repeat them, but in short, things have only gotten more expensive while we're throwing a lot of technology at this problem, and we still can't find a cheaper and more efficient way to deliver satisfaction. And that satisfaction, let's make sure that, of course, we talked about data, and data is gold, and its information starts from the consumer all the way to the end. And then the cycle starts again from investment to investment again, as I described. It just looks like optimization is taking place in the industry in all different workflows and different vendors and different banks, different kinds of banks, different kinds of markets, the origination cycle, the capturing the lead and accessing the lead. A lot of tech money has been spent there as well. And then it goes into racing to the close. A lot of tech optimization there with e-closing and MISMO doing a great part in guiding the markets and getting volunteers to contribute towards standardizing language so that it gets more efficient and more secure and safe. And then past that, I'm defining everything you guys know, but each piece of that hand transfer that David was talking about, if not hand transfer, the transfer of information, led to cost, touching the data again, as he pointed out, so that's why we're all here together to outline that it ends up being an experience for that party talking to the other party before he passes the baton to another one. So we lose sight of the customer who's buying the house while they're waiting for this long journey, and the data of theirs is being transferred from one party to the other, from the lead to the loan broker, to the lender, to the escrow, to the title, to the appraisal, to the closing, to the wire transfer, and so on. And when they're talking to each other, that experience should also get better. It shouldn't get worse, and it shouldn't get more expensive. And I think because we're in the transformation, someone has to pay for the price for making that mainframe, right? Once you've got the mold, then it gets cheaper. So I think we might be stuck in the middle of that. But the good news is that we're making very good progress with everybody contributing. And of course, data is used by all the right players to deliver value, but data, as much as being worked upon by innovators and parties adding value for this process, is also being used by bad actors. And hence that issue of cybersecurity, where the niche we are in puts us into a very pivotal position in that journey to be able to ingest and see from the beginning how many different workflows or exchange of data transactions triggered risk for change of data, breach of data, capturing of data, misrepresentation of data, neglect of data. Data at rest is also vulnerable. So you can't let data sit there and rely on it to be safe next day or the following day. Your licenses for parties involved, the reps and warrants they're making could be expiring while you're finishing your transaction. That transaction might not have an airtight closure. In the past, it's been condoned, let it go through, we'll fix it later on, post-close. Now we're talking about compliance. And when you get into that place with new technology that you guys have put together, and a lot of your other peers as well, is capturing that as well. So stitching it all together is, I think, taking good steps towards better customer experience. But I didn't want to just focus on the home buyer alone, because of course their home down payment, lifetime savings are getting hijacked today, right? So we've talked about that in this conference a little bit. There's companies who can provide that solution. And then there's obviously towards the end, your manufacturing of the investment when it comes to ahead of securitizing the pool of loans. There's that audit and compliance to get a proper rating, the value of that asset. There's a lot of legwork there. And if data fed into it, it's got errors. Now you've got more expense and time to come up with the right asset quality. That can benefit from leveraging data captured ahead of time that's been verified and sanitized to a degree that if it's not too old, can very quickly flow into a what Amazon effect that you were talking about, David, in the same day if I could get it done. It's a little far, but we're headed there.
No, absolutely. So, you know, one of the big things here that we kind of want to have some takeaways for everybody, you know, let's start with the main item, Chris, that you think is the biggest takeaway from this topic today for you in your space.
I mean, to avoid being redundant, I'm not going to avoid it. Really, you know, checking early and checking often. I know that that's what the bullet point says, but honestly, that's what you should do. And it's not, again, it's not in a manner where you are going in and touching the data over and over and over again, but having that occur just on top, where things can continue to move down the line, not being a speed bump or a roadblock, not creating friction in the process, but being able to say, all right, you can continue to move forward now. We haven't found anything. There's not not the indicia of any fraud or something like that. Being able to do that in the background as much as humanly possible and letting go through the flow. I mean, like I've said before, and I think I said just before we got on stage as well too, compliance should be a cost avoidance center. But at the same time, companies don't fund any loans, compliance can't get paid. So you can't just be a no, you can't just be a stop, you can't just be a large speed bump. You've got to work with the business, you've got to be able to go in and get as integrated as you can, but sit back and be able to watch things be monitored on a real-time basis and step in when necessary. So not to get overly territorial about things or whatnot, or it has to stop here and I've got to have a manual review and all of that. If there is a significant issue that needs to be remediated, or if you're working under a consent order like a lot of folks are, that may be part of the process, but because it's contractually required or it's required by a consent order or something like that, that I understand. But if not, building those processes to be able to monitor that information, monitor compliance, monitor just overall adherence, even to investor guidelines and things like that. It doesn't necessarily even have to be strictly about legal compliance. It can also be about compliance to the people that are buying your loans, the people that you're funding for. That's important as well, and that can all be put into that same kind of monitoring mechanism. I would say that would be my takeaway.
That's great. So David, from your perspective, what's your takeaway from today?
So actually, I'm going to pivot just a little bit off of what Chris is talking about, and that is, getting rid of the environment where you've got the checkers checking the checkers checking the checkers, and move to one that is, that is more streamlined, has the ability to be automated, and you can have faith in the data that's there because it's done conforming to standards for the industry. It's captured in a way that is, tamper evidence, so therefore it can be trusted, and that, you have automated processes that you don't have to check over and over and over again. But monitor. And so I think that's the other piece of it too, is to, really kind of have that target to have what I call a straight-through process.
That's great. For you, Anne-Marie, what's the biggest takeaway?
Yeah, I think I talked a little bit about, sort of what responsible innovation means to us at FHFA and sort of how we think about it when we think about our regulated entities exploring, various types of financial technology. But I think, one of the things that I'll sort of double down on based on the conversation in this panel is the need to build trust into a more digital mortgage process from beginning to end. Trust from the perspective of the borrower, the consumer that's ultimately taking out that mortgage loan. Trust that they understand the process fully and that as it's going through a more digital process that their data is being used in a way that they fully understand with their permission. That's leading to a number of different process efficiencies. But also trust from the perspective of all the mortgage professionals that work throughout the process, from the loan officer to the processor to the underwriter to the closer. Everybody has to really be on board and fully understand what a more sort of digitized mortgage process looks like and what it means to be able to use that data and to trust in that data and to have that data be verified early on, but then to be trusted throughout the process.
That's great. And then for you, like, what's your main wrap up here that we have?
I think we discussed so much that it's been said already. So I think what the takeaway here would be that customer experience with digital innovation, responsible innovation should deliver results soon. We're in the middle of it. And trust is important, common thread between all different parts of the manufacturing belt for this industry is data, and data is all different sorts. And as you go through that timeline, data is added as you go. So yes, monitor is important. Monitoring it is important at all given times. And then there's obviously, it's in line with verification as per regulatory compliance, so that embedded real-time solutions, real-time source data, would be quite valuable in delivering this coordinated approach.
Absolutely.
Do you mind if I ask a question of the panel and of you, Chris?
Yeah.
Sitting in the position that you're in and the role that you play, what keeps you up most at night? I mean, what's one of the things that keeps you up
To
most at
add, you securitize your loans at your firm, so you're best placed to talk about it. That's why we all wanted to have you address this.
Yeah, so one of the big things as we talk about this that really kind of keeps me up at night. So I'm a strategic worrier by default. That's what risk gets to do, right? When I look at all of this, my biggest worry is constantly, how can I be sure of all the changes that are coming down the pipe? How can I be sure that my loans are going to maintain and be compliant with all of that, right?
Yeah.
There's so many changes, and you get pressure from all these different sources that say, I need a perfect loan. Well, being in this industry, we all know the likelihood of a loan coming out perfect is very, very hard to do, right? And there's people that do it constantly. There's people that can't quite get there. There's things that change all the time. So that constant churn is one of the things that worries me. Like when you talk about what Anne-Marie with what you have for the innovation, responsible innovation, it really worries me from the perspective of how are we going to keep up with the right technology? What's the right technology? Where is the right technology? How much can I have trust in a vendor partner to go down this path and kind of figure these things out, right? So from my perspective, that's like, it's keeping up with all of it, right?
Yeah.
And, I'm more than anybody, I'm all about the innovation. I would just rather find it like immediately and move on, but it's never as easy as that, right? To just move on from it and have something in place. So that's one of the big things.
I have another question for you.
Yeah.
And I don't have, maybe the audience, some might not have the answer. It would be nice to hear from you, post to close, when you've got these pools of securities, before securitization, the rating process, and the effort and money spent into that. how tedious is it? A little light on that would help, because we're so focused in our conferences about, what we're doing, compartmentalized. But that's a very big piece of what we're making, what ends up on Wall Street, and then the world buys those securities. Outside of the US dollar, and outside of that being the most, big asset class that everybody invests in, mortgage-backed securities is the second closest to US dollar that they invest in globally. So I'd like to shed some light on that. That would be helpful.
So it's interesting that you bring up post-closing. So that's like what I stress to the executive team all the time is like, if we can't get a perfect loan, we better invest heavily in the post-closing piece of the whole process, right? So that process, if you don't, like in my opinion, I think that some of the most innovative solutions will come out of that area.
Yeah.
Because that area is the area that sees everything. They see all the defects. They see it from different perspectives, right? They see the repurchases that come back. They see the insuring issues that come up with government loans. They see the documents. They get to touch all of the issues that happen from a federal, a state, regulatory kind of perspective.
Reconciliations are expensive.
Yeah. And so post-closing, in my opinion, is probably one of the areas that I've seen a lot of companies underinvest in, because that's really what kind of holds everything together. And that's where, because it's not on the front end, because it's not occurring during the transaction most times, I think that's the area that gets the least amount of innovation right now as well, right?
Yeah.
So I think that's a really big area for the future that people can focus on and kind of push through as well.
Well, this was a good setup to lead into that topic going into next event and have more participation.
We do have about 7 minutes left, and I did want to make sure that if somebody wanted to ask a question from the audience, that we'd have enough time for the panel that's up here. Anne Marie said she'd answer anything about credit scores that people wanted to ask. So any questions out there besides FHFA's credit
There's
score?
this gentleman over there.
There you go.
I think
Adam?
we know him.
It's a plant. Sorry.
Chris, you mentioned post-closing is ripe for continuous innovation, given the insights that are gained from defects across a multitude of credit issues, collateral issues, et cetera. What's the process a firm like yours that's kind of sits between origination to portfolio retention to kind of all aspects of the business, M&A included, right? You're one of the few guys out there that's buying a lot of IMBs and growing. How do you take those insights and incorporate them into that continuous virtuous loop of process improvement? How does it happen? Is it happening in a cadence that you think is acceptable? And what are the tools you need to make that happen?
So that's a topic that could be its own session, in my opinion. But with that being said, one of the biggest things that you kind of have to force upon folks is what I've typically seen is I've seen a separate quality control meeting that talks about the results of the loans that you originated 120 days ago. Then there's a separate meeting that goes through the servicing results. Then there's a separate meeting that goes through the repurchases. Then there's a separate, so the point here is that the biggest thing I think that people need put together for many organizations is putting all of that information about anything that's related to any possible defect. It needs to be in one spot. And once it's in that one spot, you've got enough to get to the insight that you want to see so that you can then start changing and making corrections, right? So for us, we put it all together, we go through it, and then the thing that I find as the risk guy in the room, people definitely don't want to talk to risk. They don't want to tell us their problems, that kind of stuff. I get it. But the big thing that I find in that situation is that you can't let folks leave the room without a takeaway, right? So having a takeaway, documenting it, like utilizing some sort of a governance, risk, and compliance system to have an action plan, right? Those kinds of steps push it down that path, right? And you'll see it because there's a lot of people that have this figured out better than I do. There's a lot of people smarter than me. I'm not the smartest guy in the room. I'm just the person that will work through and diligently check the stuff off. But, you know, from that perspective, look at what the agencies are doing. Look at how they approach the process. They've got a lot more people working on it. And I take that same approach with credit risk. If an agency doesn't want to have an overlay on something, they've got a lot more data that supports that decision than I do. And so for me, I think the biggest takeaway is putting it all together. Like, what do you guys, and I know, you know, from that perspective, like, Anne-Marie, how have you figured out what you want to focus on? Like, how do you get the data to understand what you should be focused on? Like, how do you know what topics are important to the people that are out there that you want to try to focus on? Like, where have you gone with it?
Yeah, we have the benefit being a government regulatory body to issue requests for information to sort of seek out, you know, what's on the top of industry's minds, stakeholders' minds.
Yep.
We have a good feel for what's on the top of the GSE's minds. And so we issued an RFI a couple of years ago when we first formed the office that really sought to figure out, you know, well, what are the risks, the opportunities, the barriers in all aspects of fintech, data being one of the key areas. And that's one of the key areas that we heard overwhelming feedback on. Focus on the data, data standards, direct source, alternative forms of data, building trust in data.
Yeah. Yeah, that absolutely ties in well with it. And like for you, David, like what gives you the next focus for MISMO, right? Like how do you guys put together your information to be able to say this is something that needs to be addressed from that perspective?
There's really two directions. The number one direction is our membership. And so MISMO is structured, we're a relatively small organization. I've got 7 full-time employees, but we have about 800 volunteers from across the industry that work within MISMO. And it's from those groups. There's a process for, teeing things up for review and discussion, and then a process if there's standards or other types of documentation that need to be produced. There's a method for that, but it's driven by our members. So it's like, excuse me, as a member, you get a seat at the table, and the seat at the table says that you can talk about what's important to you, and that's how it gets started.
So I think what I just heard from both of you would be that it takes everybody in this room to give feedback to help us all get there, right? I think that's yeah, go ahead.
I wanted to echo David's sentiments because we at FundingShield are a poster child in a way because we're probably the only MISMO certified cybersecurity firm, and our journey started with MISMO. We were recommended to go visit MISMO. It was a great forum of all the volunteers and innovators in the industry for no pay are contributing into an industry where they wanted to see it do well. And when we got there, we were just taken back with learning that there's so many good brains and leaders in the university from in the industry from the biggest banks and GSEs are sitting there talking about pain points and trying to figure out what will be the best way to attack it voluntarily. And that really jazzed Adam and myself up, and we wanted to start attacking those pain points from not being a not-for-profit, but it gave us birth to like, let's attack these problems, see where we fit in, and see if there's a niche to be done. So we're one of many, of course, but I can certainly speak for that. And today I'm on the MISMO board with you. Thank you for the invite. So certainly a great association to become a member of if you're in the tech world.
Yeah, can I add also, because we also have participation from FHFA. That's right. As well as VA, FHA, Ginnie Mae. So we have a working relationship with the regulators as well. And that's very important because it's a safe forum where everybody can come together and talk about what's important without any.
And now it's part of MBA. MISMO is part of MBA now.
Well, we're a subsidiary. But we are a separately
such good
run
outreach too now.
organization.
Yeah.
So I have my own board, as you well know.
Yeah.
that helps me manage. So all good.
Well, I think that kind of wraps up the presentation for today. I hope you folks got some useful information out of it. So thank you for your time. We really appreciate it.
Thank you.
Thanks for moderating, Chris.
Thank you, Chris.